Good morning, this is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda. Clashing with Canada. Trade tensions rise after President Trump threatens a 35% tariff on some Canadian goods and raises the prospect of increased levies on most other countries. China's Foreign Minister Wang weighs in, blasting the US over its trade policies, saying Washington is abusing tariffs. And JPMorgan boss Jamie Dimon says markets are complacent on Donald Trump's tariff policies. He says a deal between the US and EU needs to get done. Plus, we will bring you an exclusive interview with the chief executive of SAP, Europe's most valuable company. Our conversation with Christian Klein is at 6:30 a.m. UK time in the next episode of Bloomberg Tech Europe. Good morning, happy Friday. So we had warned you at the start of this week that there would be tariff headline volatility, and we have had a reminder of that today, with 35% now threatened on Canada and a baseline of 15 to 20% being threatened by President Trump. The markets, though, still relatively relaxed, though there is some downside pressure today. You've had 4 straight days of gains, though, for European stocks. Today, a little bit of downside pressure, pointing lower by 0.2% on the European stocks 50 futures. FTSE 100 futures currently flat. S&P futures after a record high, a fresh record for S&P 500 yesterday by the end of the close, now pointing lower by 0.2% on the headline risk around tariffs. Nasdaq 100 futures pointing lower by 43 points. Let's flip the board and have a look cross asset. Dollar strength is certainly a story today, weighing on the euro. Euro at 116 then. You've been at this 117 level for most of the week, now at 116, down 0.2% on the single currency. The benchmark 10-year at 435. Treasuries largely unmoved so far in the session. Brent at $68 a barrel, currently up just 0.1%, and gold getting a bid on something of a safe haven move to the yellow metal on this tariff anxiety, up 0.3% at $3,332 per troy ounce. Let's get more reaction right now and particularly focus on what's happening in the Asian session. Let's bring in Paul Dobson, Bloomberg's executive editor for Asia markets. Paul, there was a bit of a reaction then, but markets don't seem too ruffled by this. Still relatively immune, it seems, to the headline tariff risk.
Hey, good morning, Tom. And I think that that's the right takeaway. You know, you just flashed up the board. It showed US futures down 0.2%. Not screaming panic by any means, yet a little bit more of a risk-off kind of vibe percolating through America's markets at the very least. In actual fact, Asian markets are broadly higher. So over here, we're kind of shrugging that off more or less altogether. I think there's a couple of things here. One, although the headline announcement on Canada is 35%, a lot of it a lot of the Canadian exports to the US are covered by the USMCA, and therefore they wouldn't be included in that 35% kind of catch-all bucket. So that's one thing. It's not quite as spectacular as the headlines suggest. And two, although, you know, kind of Trump keeps moving the goalposts, this is part of the problem. No one really knows what to latch onto, and everybody thinks everything is still up for negotiation. And therefore, you know, the market it continues to hug these record highs that we've been seeing recently, and kind of almost has got a little bit desensitized to the massive number of tariff headlines that we've had all the way through this week, as you alluded to.
Yeah, desensitized, or, as Jamie Dimon of JPMorgan, of course, would say, complacent. Is there complacency? How widely held is that view now by Jamie Dimon? There is complacency in these markets when it comes to the tariff risk.
I definitely think that people have in the back of their mind that concern, right? And it's a little bit of a sort of self-fulfilling prophecy in a way. Look at implied volatility on the US equity market is the lowest since February. The MOVE index for treasuries is the lowest since 2022. The market really is not pricing in very much risk of extreme volatility from here at all. And the risk, and you know, we're at record highs on the S&P, we're at record highs for Bitcoin for that matter. The risk here is that Trump feels emboldened, right? He thinks that the market's got his back. He said so much in tweets today. He said that the U.S. stocks are loving the tariffs. Look at where they are right now. And so he goes harder, and we get to a point where he says something or does something that's so extreme that again the market kind of like has that bit of a panic that we've seen a couple of times already this year and goes back into a little bit of a meltdown. So that's the kind of risk. That's the fear in the back of people's minds. That's the complacency element, as you like, but. For all of that, we've learned that every time the market sells off, people buy the dip and we come back up again. So why price that in? Why worry about it too much? That's the conundrum that investors are having to grapple with at the moment.
OK, Bloomberg's executive editor for Asia Markets, Paul Dodson, thank you very much. On the Asian market reaction to the latest tariff news, the 35% tariff on Canada is higher, as Paul mentioned, of course, than the announced 25% that was announced in April and comes despite ongoing negotiations. Let's get more in terms of the details around the tariff threat targeting Canada with Bloomberg's Katia Dimitrieva. Katia, what do 35% tariffs then mean for the nation of Canada and its trade with the US?
Well, 35% tariffs, as Paul just mentioned, it doesn't actually, it's not going to be as impactful as it might seem initially on the headline when you read it, because the USMCA and goods traded through USMCA trade deal are actually exempt. In other words, the majority of trade between Canada and US, so think machinery, auto and auto parts, all of that will be exempt from the higher 35% tariff. It's also not that much higher than where we are already at the 25% level. So that's potentially why we're seeing markets not trading as much on this, even though the loonie obviously had some fluctuations earlier. And it's also kind of remains to be seen, right? Like we've seen this game before where there's a tariff announcement, it gets moved back, especially for Canada, because Canada still needs to have this negotiation with the U.S. and Mexico about updating the USMCA. So there's kind of an open question. Will this tariff go into place before then? Will it just be used as a negotiating tactic as they continue speaking? So it's not overall not as maybe big of a deal as first thought.
Katia, what is the state of play, meanwhile, for US trading partners that have yet to receive letters? Canada has received that letter. Now President Trump, there was an assumption that the baseline tariff would be 10%. Now President Trump is putting a question mark over that.
Yes, it was a huge week in tariffs. I mean, even starting from Monday, we got the tariff letters on all of these economies that went up to the double digits. They were kind of mostly in line with what we saw on Liberation Day. And there's a few economies who are still in negotiation. So Japan and South Korea really actively trying to bring those levels down and try to avoid getting those tariffs in place before August 1st. But the 20% level is interesting strategy, because it would effectively double what markets and economists had expected from President Trump on the universal level, and basically doubling the economic damage. And then the question becomes, well, is this just sort of a tactic from President Trump, who, as Paul just mentioned, he monitors the markets. The markets aren't moving too much. It will just embolden him to take further steps and raise tariffs further until those markets start reacting, at which point he dials it back. And the answer right now, at least for today, we're not sure, but I mean, we can expect next week to be full of more surprises as well.
To next week, Katia, then, what are you and the team going to be watching for as the tariff story unfolds towards what is now apparently the new deadline of August the 1st?
Well, there's going to be a lot of action in terms of scrambling for further talks. We have Scott Bessent and Lutnick in Japan next week, for example. We're also going to get a lot of economic data that's going to really underscore what's at risk here for economies. So Japan and China, we're getting just a slew of data from across the economy, from the unemployment rate to inflation, labor market dynamics, and GDP, of course, in China's case. And it's going to show what's at risk. It's going to show how exports continue to really stay weak on the back of tariffs, and not just tariffs, but about uncertainty. It might show that investment and industrial production is likely weakening on the back of the uncertainty as well. We're seeing price pressures. So already companies across Asia are paying for the tariffs in a way because they're negotiating with the U.S. and their U.S. companies that they supply, and they're going to have to knock down those prices further likely. So we're going to see a lot of that in the trade data next week, starting from Monday.
OK, excellent breakdown of what to look for in terms of the tariff impact as we weigh up, of course, these threats of 35% on Canada and maybe up to 20% baseline. Katia Dimitrieva, thank you very much indeed. Now, JPMorgan CEO Jamie Dimon, as we mentioned, has warned that markets are complacent on Trump's tariff agenda. The Wall Street boss speaking at an event in Dublin with Irish Deputy Prime Minister Simon Harris. Let's bring in Bloomberg's Valerie Taiffs for a gauge, again, on the markets and how they are absorbing the tariff risk. Jamie Dimon warning of complacency. How widely held is that? Does he have a point, or do the fundamentals suggest that, look, things are OK, we can read through the tariffs, the economic data out of the US hasn't cracked completely, the Fed could be cutting twice, lean into the rally?
Look, I think there's many people out there who do share Jamie Dimon's view. I mean, we've had all-time highs in the S&P 500 at the same week where we've had a ratcheting up of these trade tensions. But what it could also show, Tom, is that the equity market is just trading off of different things at the moment. This chart on screen is showing you how, back in April, when this trade policy uncertainty really spiked, it really harmed the equity market. That's not happened now. The equity market is clearly looking at other things. Yesterday it rallied more off of the positive read-through from Delta earnings than it did from these tariff threats. So maybe this is just the equity market saying, I'm not too worried about what Trump is doing. I'm more focused on the earnings outlook and the next data point we get on inflation. So maybe in some way the market does kind of agree with what Jamie Dimon is saying, because equities are clearly not trading in terms of these tariff threats as they were previously. But, neither has the dollar this week. So I think a lot of these things are just really compounded investors this week. He also had some more warnings. He did warn that he thinks that the Fed has a 40 to 50% chance of hiking. That's due to his hiking. Yes, hiking. So very out of consensus of what the market is pricing in. We're pricing in 2 cuts the remainder of the year, but that's all down to his anticipation of firmer inflation off the back of tariffs. He then gave a very blunt message when it came to the EU and its competitiveness, warning a lot of the same things that were in the Draghi report that he's warned on before, that the EU has a huge problem. It needs economic reform, capital markets reform, even comparing the GDP growth of the U.S. over the last 15 years to that of the EU. It's really dwarfed it even since COVID as well. He did mention that just the scale and the depth of markets in the U.S. is something that the EU needs to try to compete with, and these reforms are very urgent. So he had, I guess, more of a blunt message to the EU while he was speaking in the EU, in Ireland yesterday.
Yeah, absolutely. And he's joining many others in making that case to EU officials. Talking of the Fed, and you mentioned Jamie Dimon's view that maybe you even get a hike from the Fed, given the inflation risk. We've also been hearing as well from one Fed official, a number of Fed officials speaking on the potential impact, of course, on tariffs on inflation. St. Louis Fed President Alberto Mussolem weighing in on this. Let's take a listen.
It's going to take time for the tariffs to settle what people are actually paying and therefore how they're passing through. When we look at surveys, and these are publicly available surveys by several reserve banks, the expected time that companies are working with in terms of pass-through is something like 3 months after feeling the initial price increase, whether directly or indirectly.
OK, Mussolem of the St. Louis Fed, of course, Jamie Dimon, seems convinced the tariffs are inflationary, but Fed officials don't necessarily agree. Well, they're split, frankly, aren't they? That's what the minutes suggest. They are divided in terms of how the tariff impact shows up and for how long.
Yeah, exactly. We're getting more hints about the fact that, yes, the Fed is divided on the tariff read-through. But as you mentioned, the Fed minutes did solidify that most of Fed members are worried about persistent inflation from tariffs. We still have more comments coming out, showing that it's really up in the air at the moment. We also heard from Fed's Mary Daly yesterday saying tariff price hikes may be muted. And I think the issue here with at least with what the market is trying to interpret is we might not get this clarity until Q4, maybe even next year. Even if we do get this one-time price increase in CPI, is it going to be persistent or not? That's a long-standing question that the market's going to have to deal with. But definitely, it does seem like the Fed is divided, at least slightly, on how persistent the tariff-induced inflation could be.
OK, Valerie Teitel, thank you very much indeed. And what we've been hearing from Fed officials and, of course, the CEO of JPMorgan. You can get a roundup of the stories you need to know, of course. To get your day going in today's edition of Daybreak, terminal subscribers can go to DAYB Go on the terminal, and as expected, of course, it's the tariff rate, 35% on Canada and up to 20% baseline that is dominating coverage, and you can get more analysis there. Coming up, China's top diplomat says the United States is abusing tariffs ahead of a meeting with US Secretary of State Marco Rubio. We will be live in Kuala Lumpur, where Asian nations from ASEAN, of course, that grouping, are meeting. That is next. This is Bloomberg.
Our subsidies are in accordance with the WTO rules, so this is very, very clear. We want a level playing field. We are very worried about the economic coercion of China, and we are also worried about their enabling Russia's war in Ukraine. So these are the two big issues we have.
Well, the EU's top diplomat, Kaja Kallas, speaking to our team, who are on the ground, of course, for us in Malaysia. China's foreign minister, meanwhile, says the United States has abused tariffs and undermined the free trade system. Wang Yi also expressed his opposition to unilateral tariffs when questioned by Bloomberg's Min Lo.
Minister Wang, what's China's position on tariffs?
Oppose unilateral tariffs.
Are you meeting with Secretary Rubio?
OK, well, we go now to Min Lo in Kuala Lumpur, and difficult to pin down the Foreign Minister of China in these public events. So you did well to get an answer from him. Wang Yi had some strong words about the US ultimately, didn't he, Min?
Yes, he said that the U.S. is undermining global supply chain and free trade, but he says he believes that ASEAN countries are going to resist unilateralism. And he came out of that ASEAN foreign ministers meeting. He held on to the hand of the Malaysian foreign minister for a few beats in front of the media. Clearly a very symbolic gesture there to show that close ties between China and ASEAN as the two sides are looking to upgrade their free trade agreement before the end of the year. He also had a bilateral meeting with the Vietnam foreign minister, and I thought it was very interesting that he said China is willing to work with Vietnam to secure and safeguard the legitimate interests of all countries. And this is significant because of China's rhetoric so far, saying that it will take countermeasures against countries that strikes deals with the U.S. that undermine Chinese interests. And Vietnam, for one, has already agreed to that tiered tariff level, 40% tariffs on transshipment, which is really targeting a backdoor for Chinese exporters. And yet, the tone from Wang Yi appears to be pretty constructive and positive and quite friendly, in fact. So that's quite significant, and it really shows you that, Wang Yi is really here vying for influence with Marco Rubio among ASEAN nations, and of course, it's Rubio's first trip to Southeast Asia as well.
OK, the influence play is there then from both the US and Chinese sides. Look, you asked Wang Yi about this, whether he would be meeting with the US Secretary of State Marco Rubio. We know that he will be ultimately and likely on Friday. What can we expect from that meeting?
Yeah, it was a late addition to both men's schedule. It was just announced by the State Department earlier this morning. It's happening this afternoon, 3 p.m. local time. And it's quite significant because this is the first time that the two men are sitting and meeting face to face. They had a chance to do that in February at the sidelines of the UN Security Council meeting in New York, but they didn't use the opportunity then. So the fact that they finally agreed, the fact that it's happening at all is really a sign of relations warming up, especially after both sides sides agreed to stick to those terms that were agreed in Geneva. The trouble here is that Marco Rubio is, someone who actually doesn't have a lot of power to decide on trade issues. Scott Bessent has said he's going to meet with his Chinese counterparts in the coming weeks, but we are wondering whether Marco Rubio will be discussing a potential trip by President Trump to China sometime soon. Rubio didn't confirm whether that's on the agenda, but he said he will be raising the issue of Russia. He said China has been giving as much support to Russia as possible without getting caught, and he wants to talk about that, especially ahead of President Trump's announcement on Monday that we're expecting potential sanctions on Russia. Of course, the question is whether China will also be implicated in potential secondary sanctions for buying oil, LNG from Russia as well.
OK, Bloomberg's Min Min Low on the ground for us in Kuala Lumpur. Great reporting, Min Min, thank you. Now, Britain and France have agreed to exchange migrants as part of a plan to deter illegal crossings by boat. The deal was struck by UK Prime Minister Keir Starmer and French President Emmanuel Macron. Under the terms of the deal, the UK will return a number of cross-channel migrants each week to France, with Britain accepting the same number of asylum seekers from France, having been vetted. Coming up, a shake-up at Santander. We're going to switch focus to zero in on the banking space, sweeping changes, reshaping the bank's wealth arm. We're going to look at what it could mean for continental Europe's biggest bank. We have that story from Madrid. It's next. This is Bloomberg. Welcome back. It has been a year since Ana Botín shook things up at Banco Santander, appointing Javier García Carranza to run its low-profile but profitable wealth and insurance business. Now that decision is bearing bold results. Let's go live to Madrid, where Bloomberg reporter Macarena Munoz joins us with the details. Macarena, what changes then is Javier García Carranza implementing, and why is the Spanish bank taking the steps that it is?
Hi, good morning. So he used to be an investment banker at Morgan Stanley and joined Santander back in 2016. Last year, it was a surprise when he was appointed global head of its wealth unit, which includes private banking, asset management, and the insurance business. Some of the changes that he has made during this year has been changing a number of managers. He has cut costs. He has been boosting some new businesses, such as independent advisement in private banking or the life and pension business in insurance. This is a key area for the bank. It's a small unit. It represents like 13% of the bank's profit, but it's a very profitable one. And the bank wants it to grow because it's a key fee generator.
How do these changes then, Macarena, fit into the broader strategy for Santander?
Yeah, so as I was saying, the bank wants to boost fees as net interest income is being lowered by the lower interest rates. So growing in fees is key, and this business of private banking, asset management, and insurance generates a lot of fees. The bank will present a new strategy in the coming months, and we expect to hear news from this unit.
OK, Macarena, thank you very much indeed on the changes at Santander. Bloomberg's Macarena Munoz out of Madrid. Meanwhile, Bloomberg understands that Citadel Securities has bought Morgan Stanley's unit focused on electronic market making for US equity options. Sources say the trading firm, founded, of course, by billionaire Ken Griffin, acquired Morgan Stanley's on-exchange options business and took on a large portfolio of equity options positions. The move expands Citadel Securities' already dominant role in the popular derivatives. The UK's National Crime Agency has arrested 4 people, including 3 teenagers, over a series of hacks targeting British retailers. The attack on Marks & Spencer caused disruption to online sales and an estimated £300 million hit to operating profit. The 4 people have been arrested on suspicion of blackmail, money laundering and participating in the activities of an organised crime group. Coming up, SAP is Europe's most valuable company. But how did it get there? And can AI power the firm's future growth? I put these questions and more to SAP CEO Christian Klein in the second episode of Bloomberg Tech Europe. That is next. This is Bloomberg.